So good morning, everyone, and welcome to part two of the Navigating Growth series, CEO and Expert Insights for SMEs. So I'm Joanne Creevy, and I'm delighted to be your host for today's session in the first of our five-part series. Today's topic is From Surviving to Scaling, Rethinking Your Growth Strategy for 2026. So, as we move into an increasingly competitive and fast-paced business landscape, growth can feel like a balancing act. So if you scale too quickly, things become chaotic, move too slowly, and opportunities can pass you by. So today we'll explore what sustainable structured growth really looks like in 2026. And this series is designed to give you practical, real-world guidance you can use straight away. So each month we're tackling a different challenge facing SMEs, from financial management, building strong systems, refining your people strategy, and more. So keep an eye on your inbox for future sessions. So today, we're joined by Larissa Feeney, our CEO and founder of Kenor. Good morning, Larissa.
Good morning, Joanne. Good morning, everybody.
So, Larissa will be sharing grounded, experience led insights on recognizing when your business is ready for the next stage, how to step back from day to day operations without losing oversight, and what it truly takes to build a business that scales sustainable. And the best part, this is fully interactive. So it's an ask me anything. There's no agenda, no slides, just open, honest conversation. So please feel free to drop your questions into the Q&A or chat throughout the session, and we'll get to as many as possible. And just to give you a wee brief introduction to Kenor. So Kenor is an award-winning tech-enabled accountancy and company secretarial firm supporting SMEs and high potential startups across Ireland and the UK. We combine chartered expertise with smart automation to deliver clear, reliable financial support so you can stay focused on growing and leading your business. I'll just remove the slide now, Larissa, and hand over to you. We do have some questions there that have already been submitted, which is great to get started. But Larissa, is there anything you want to add there, or will we just jump straight in?
No, just a couple of words, I suppose, just to
Yeah,
welcome everybody to this brand new series for 2026. So there's different members of the team that will be joining you, Joanne, over the next few months, going through the various different topics. As you said, it is an Ask Me Anything, guys. So there have been questions that have been submitted that Joanne's going to start with now. But if anything comes to mind, please do pop it in the chat, and I'll answer it as best I can. And certainly, if I can't answer it, I'll certainly signpost you to somebody who can. Okay, Joanne, kick off whenever you're ready, please.
great. Okay, so Larissa, how do you scale with intention when the business starts to grow faster than expected? And maybe you might have an example of a business that maybe reacted too quickly and maybe what they could have done differently.
So, scale with intention when the business is growing faster than expected.
Yeah.
Yeah. Okay. Okay. So, um, I always think that even the scale with intention phrase is very telling because there's an almost a contradictory element there to scale with intention and the business growing faster than expected. Because if you are scaling with intention, then the business should be growing as expected. So that's the first thing to consider is what to scale with intention. What does growth mean for you as a business owner? What is it that you are trying to achieve as a business owner? What are your goals? So that's the first thing. And then if the business is growing faster than you anticipated, is that because you forecasted incorrectly? Is it because you didn't consider that it took you by surprise? Should it have taken you by surprise? And how do you get back on track, I suppose? Now, this is really, really hard, Joanne, because as a business owner, if the business is growing faster than expected, that means that this business owner is in the weeds.
Yeah.
So how do you get yourself out of the weeds and how do you manage to work on the business and not in the business? That's the biggest challenge for probably 99% of business owners. Um, and the best advice that I can give is to get some type of advisor on board, whether that be a mentor or a formal advisor or some type of objective individual that can help you scale with intention, that can help you stand back from the business, even if it's just for 1 hour every month, that will hold you accountable, because otherwise the business controls you rather than you controlling the business. If the business is growing faster than what you've anticipated, then you're not ready. The business isn't ready for that growth. And that means the wheels come off the bus. There's cash flow problems, there's people problems, there's, compliance issues, all the natural teething problems that you find with a growing business. So to counter that, if you do want to scale with intention, then it is about stepping back from the business, which is so hard, I know, whenever you're in the weeds. But it's in my experience, the best way to navigate this really difficult time, because this business is either in its startup phase or it's in that messy middle bit where, the perhaps the structures aren't in the business from a people perspective just yet, or from a process perspective just yet. So how do you get from where you are today to where you need to be to achieve that scaling with intention side? And that's investing in strategy, investing in those objective advisors, essentially speaking to people, Joanne, who have done it already. So you
Yeah.
can leapfrog in terms of your learning.
So would you recommend, Larissa, just to pause for a second before pushing forward and getting some of those plans in place? Maybe you might make mistakes then if you do push forward and don't have like the right advice in place, or as you say, the right people.
That's a really hard question for me to answer, because I think it goes against every entrepreneur's psyche to say no to
Yeah,
growth
yeah.
or to intentionally, I remember one of the board of directors saying to me at one point, slow down to move faster or slow
Mm,
down to go further. And that's really hard because, if you're growing a business, or if you set out to grow a business, then that's about saying yes, isn't it? So saying no with the intention of slowing down is probably great strategic advice, but it's really hard for an entrepreneur, I think, certainly for me, to say no. So for me, it was about trying to achieve the balance between the two, trying to figure out, okay, the business needs to grow, but I need to figure out how to do this with intention, or how to do this sustainably. Um, and trying to find that balance is really critical. Now, for some people, it might mean, as you say, stepping back. And that may be the best advice, but it's really hard, I think, for entrepreneurs to do that.
yeah. And I suppose, like you mentioned there, and I know you said it as your New Year's resolution about, saying no more, but how do you balance that saying yes to opportunities? As you say, you as a business owner, you always want to grow, but without overstretching your team. And like, is there any internal metrics that you recommend leaders to track during rapid growth, perhaps?
I remember being at an event towards the end of last year, and one speaker said it's really important to say no. And then the next speaker said it's really important to say yes.
Sorry.
So so how do you find that balance?
Yeah.
Yeah, so it's understanding the type of person you are and the type of personality you are and where the stage the business is at. I think. So your question was metric to track over time.
Yeah, yeah. I suppose
Yeah.
it's getting the balance to say yes to opportunities, but looking at, you're not overstretching the team, but also what internal metrics, would help you guide you on when to say yes and when to say no.
Yeah. Yeah. So it's a great question. And it does depend on where the business is at. And it does depend on what the business does. Because
Mhm.
if, for example, your business is dependent on people, so it's a service business,
Yeah,
then, you have to find a way of planning from a workforce perspective or tracking capacity.
yeah,
And that would probably be a key metric. So you have to understand what good looks like in terms of return on investment and cost benefit analysis for the team that you have. And then how do you know when they're stretched? How do you know when it's time to hire? And it's about tracking those metrics and tracking those numbers, because in a people business, it's really hard, because what one person might be capable of, another person might not be capable of. So what's the standard for the role? That can be a really important metric. If you're in a different type of business, like a product business, then it's about managing the stock and managing, how much stock you have. So you're not selling stock that you don't have. So that would be a really important metric. So depending on where your pinch points are, what's the material item in your business, whether it be man hours, for example, or physical stock, will point you in the direction of what metric you should be managing.
Yeah, that makes really good sense. Um, Larissa, I suppose, and I know you can definitely use your own experience from this question is what are the signs that a business has outgrown its original model? And I suppose we've went through that growth from accountant online to Canor. Is there any particular signs there that you from your own experience that were flags for yourself?
I think I remember somebody asking me at the very beginning of this journey, what's the business model? And
Mm,
I actually found that really hard to answer because I think in those days we were probably serving every client. And I
mm,
probably had the attitude that, we could serve any business, right? Every business needs to get their accounts done, so we could serve any business. But the reality is that you can't do that. And as the business grows and enters into new stages, I suppose it's the business owner's role to stay ahead of that and to identify trends that are coming that maybe nobody else can see. The business owner is looking 3 years ahead or 5 years ahead, or sometimes even longer than that. And you're trying to spot trends and you're trying to understand what's next in the market. And you can see things sometimes like the change, for example, from Accountant Online to Canor. I actually wanted to make that change several years before it actually happened. And the reason why I thought it was probably a good idea for the company was because the clients that we had originally served under Accountant Online were predominantly startup clients. Those clients themselves had matured and scaled and grown and required more services and more in-depth services than a startup would. So we were automatically delivering because we were meeting those demands and we were expanding in terms of the skills and the depth of the team, but the brand name didn't represent that. So there was a disconnect between what we were doing on the ground and what the brand name, told the market we were doing. So I felt that as a result of that, we needed a change. And really, for the business owner, again, it's probably back to the first question you asked, stepping back and actually looking at the business objectively and looking at the market objectively can help you figure out whether your business model fits the current demands of your customers or whether there has to be a change or a shift there. And you can organically or intentionally change the business model according to your business needs and your customer needs. And it's really easy today, especially if you're in a B2C and even a B2B business, to understand what your customer needs are because, we're on social media all the time. We're asking our customers what they want. We're getting that feedback. So it's easier to shift than it would have been in the past.
yeah, I think that's great and a big focus there on the customer, which is great to hear as well. And I suppose can financial reports or cash flow patterns help flag when it's time to evolve, Larissa, would you say?
Cash flow in particular is a really good one. I
Mm,
mean, for businesses that are growing strongly, especially with high capital requirements, which most businesses would have, the ability to forecast ahead is key.
yeah.
So management information, budgets, cash flows, actual versus forecasted. All of those numbers are really important to understand what's actually happening in the business today. So most businesses would have some type of a 3-year forecast or a 5-year forecast, even at a high level, to understand, okay, this is where we want to go. And then the importance of tracking, this is where we are versus this is where we should be at in order to get to those goals. Making sure that you have a team in place to make that happen is key. Cash flow forecasting. Okay, so again, depending on where the business is at and the type of business it is, it will have there's various demands on cash flow or varying demands on cash flow. As the business scales, though, so to use the example that we talked about before, if it's a people business, you need to invest in people. If it's a product business, you might need to invest in the product. Either or, you need the cash to do it, right? And either whichever way you go, you need to have confidence that the business can sustain itself as you are investing in that growth. And this is the real challenge for growth. And one of the reasons why a lot of businesses don't do it or don't intentionally set out to scale, it's because it's really hard, right? And it's really hard from a cash flow perspective. You're investing before you have the money. So how do you do that? Where does the money come from? You either bootstrap it from your own business profits, you bring in finance from an external party, whether that be debt or equity or whatever. But without having the cash flow forecasting, you won't have any idea where the pressure points are, where the pitch points are in the business over the next few months. So that's why it's critical. Management accounts being monthly or quarterly, regular number reporting to the business owner or to the management team to understand where the business is at right now versus where it should be at. That helps you understand decisions that you need to make today rather than, for, let's say, for smaller businesses, Joanne, we would do annual reporting for them. So essentially compliance reporting for tax returns, etc. As the business grows, that compliance reporting becomes the least important because that looks back. So, say, for example, if we were to do 2025 accounts this month in January, we'd be looking back, obviously, at 2025. Those decisions have already been made, rightly or wrongly. That has already happened. So it's almost like you're looking through the rear view mirror rather than through the windscreen when you're driving, right? It's no good. It doesn't help. So that's why we always say you need regular reporting and what's happening in the business today, real time ideally. And there's tons of software out there at the moment that will help a business owner understand their numbers in the day, in the week. And then forecasting. So again, cash flows and budgets going forward. So you can track, you can be intentional. No, this is about scaling with intention. So you can intentionally set your goal and then you can make sure you're tracking towards that goal.
That's brilliant, Larissa, because we often hear from business owners that they don't have oversight of how the business is performing. Is there any particular stage within a business that they need to get that reporting? Would you say certain turnover, or is it just not having, I suppose, control, or like how would you explain it? Or
Um, is there a particular stage where regular reporting is required? Is that what you mean?
yeah,
Like
because I
yeah,
suppose some startups wouldn't require it, but if you are
no.
growing, you want to know how the business is performing to make better decision. And as you say, grow with intention, but it's like when is the right time to get that extra reporting in
Mm,
the business?
it's a great question, and I've been asked that so many times over the years, and I've seen, relatively big businesses that don't do regular reporting and and operate absolutely fine.
Yeah,
And likewise, I've seen startups that don't do regular reporting and really need it.
yeah,
So
okay,
for that business owner, I would say definitely talk to somebody, probably your accountant or
yeah,
maybe another advisor to understand where you are at. What I would say is that if you have a goal of scale and if you have a goal of growth, then regular reporting is probably needed. If you have a board of directors, even if it's an informal board of directors, it's one of the first things that a board will insist on seeing. You can't navigate business without understanding
yeah,
those regular numbers. There's just no way. Um, in terms of what level, I mean, definitely once you get over 1 million in revenue, regular reporting is needed. But even if you're under that and you're in startup phase, and if you have got some type of investment, your investors will demand regular reporting anyway. Even if you haven't got investment and you're trying to bootstrap, that cash flow forecasting to understand how much runway you have left before your cash runs out is important too. So I think it's probably the exception that you don't need it rather than the exception that you do need it.
yeah, that makes sense. So always good just to suppose to discuss with your accountant or as you say, as an advisor, if it is the right time. I know we touched on it earlier in the session, just around, sometimes leaders or business owners just being in the weeds. So how can leaders shift from being hands-on to building a scalable structure? I know you have got great experience in that as well. If we can touch on that.
So I would say from my experience, Joanne, um, the one thing that changed was developing myself. I think sometimes the business will only grow to the capabilities of its owner.
Mm-hmm.
So if the owner is, let's say, more comfortable in the weeds, even though they might say that they don't want to be in the weeds, the reality might be different. They might feel more comfortable there. And sometimes I see that business owners maybe don't do the work on themselves in order to help them move out of the weeds and into a strategic position. So first of all, you have to really want it, genuinely, honestly want to do it.
Mm-hmm.
I think it's okay for business owners. Of course, it's okay for business owners to say, no, I don't want to grow the business. I'm happy doing this. This is my favorite part of the role. I like, talking to the team. I like meeting clients. I like whatever it is. I don't like their strategic work. I want to stay as I am. That's absolutely fine. If that's not you, and if you really want to grow the business, then the first thing to do is to make sure that you're capable of growing the business. Because remember that none of us are trained to be business owners. I mean,
Yeah.
there is obviously college courses in entrepreneurship, but the vast majority of us didn't go those routes. We started a business doing something that we like to do, and then the business grew. So if you don't develop your own skills, you won't be able to develop the business. It stands to reason. There's loads of help out there, business owners, Joanne. I mean, there's loads of accelerated programs, there's loads of mentor
Mm.
programs, there's loads of mastermind groups, there's coaches, there's mentors. Some look for payment, some don't look for payment. There's books, there's podcasts, there's tons of resources
Yeah.
that a business owner can use to help them upskill. And that was probably the biggest game changer for me is over several years continuing to work on myself and to make sure that I have the skills to grow the business. Because if you don't invest in yourself and if you don't have those skills, then either the business won't grow or you'll be changed in your role. Either you'll sell the business or somebody will be put in your place that does
Mm.
have the skills.
Yeah. And I know this question can be very specific to the business, depending on what type of industry you're in. But what roles or responsibilities should leaders typically delegate first?
Um, the where you start, if you're in a startup business and the danger is if you try to do everything yourself.
Mm.
Um, and sometimes it can take more time to learn to do something than it does to outsource it. And it can cost you money because in that time that you're learning to do whatever it is, you could be selling or you could be building or you could be generating revenue or doing something else, right? So looking objectively at yourself in terms of what your skills are. So I remember at the start of this journey, we worked with a consultant through Enterprise Ireland to help put a structure, like an org structure on the business before there was ever an org structure. And at that time, I was performing all the functions. And her initial advice was the first senior person you appoint should be in operations because that's not an area that you're strong in. Um, and for me, it would be a lot harder to be good in that area. And I wouldn't do it as well, obviously, as somebody who knows it and is skilled and qualified in it. So that would be the advice that I would say. The first area you delegate is an area that you're not strong in. So it could be marketing. It could be, in my case, it was in that situation, it was operations. It could be bookkeeping or payroll or numbers in general, whatever particular area that you're not strong in, because we're not strong. Of course, business owners are generally not strong in any area. We're just kind of, okay or fairly okay-ish across several areas. And that's why the advice always is to bring in people that are better than yourself. And in most cases, that's not hard. Um, so delegating those areas that you're not good on means that you can concentrate on areas that you are and you can develop the business further. The challenge is if you're in startup phase, it's you have to be okay with making that investment in whatever that is. And then you have to let go enough to trust the person to do what they do and to give them the responsibility for getting that done.
Yeah. Um, that's really helpful, and it is kind of looking at your weakness. You could say a little bit, Larissa, isn't it?
Yeah,
First,
yeah, yeah.
and be
So there's a level
comfortable
of
with that.
self-awareness.
Yeah,
Yeah, there's a
yeah.
level of
No,
self-awareness. Yeah. And that
that's really
actually
good.
goes across all areas, doesn't it? Because even earlier
Yeah.
on, whenever you asked me about developing as a leader, it is about identifying where you're not strong at and seeking
Mm.
support in those areas. And in the case of actually managing the business or managing the team, the
Mm.
same applies. Where are you not strong? And so you can delegate that out. That
Mhm.
allows you to work on an area that you are strong in. And you'll probably get a better return, certainly more efficient because we see it all the time. In our case, of course, we see it, Joanne, with bookkeeping, with
Yeah.
payroll, with accounts in general. And we see things like the business owner VAT returns, for example. VAT returns are due now this week.
Yeah.
And for anybody on the call that hasn't done them. Um, and I was even talking to a business owner just today, and she said to me, "Oh God, I have to do my VAT, and I have to do this." And so you'll naturally put it to the bottom of the pile. You'll naturally avoid it or procrastinate over it because you don't like doing it, you're not good at it, and it's the last thing you want to do. But
Yeah.
by delegating that out to somebody else, then it just gets done, which is,
Yeah.
which is much more efficient.
Yeah, for sure. Larissa, how can leaders maintain quality and consistency when they're no longer involved in every detail? Is that anything that maybe you struggle with a little bit or anything?
You're talking, I suppose, about the tendency to maybe micromanage or overmanage individuals in the team. So, how do you trust that the team will do
Yeah,
what you want them to do and what they've been paid to do? And that's really hard. It's
yeah,
really difficult for a business owner to do that. What I would say is that if you don't do it, then you end up doing it yourself, which
yeah,
limits your growth, which takes away from your time and affects your work-life balance. And, there's so much impact of not doing it that you feel as if you have to do it. So then it's figuring out, okay, how are you comfortable? How can you be comfortable that the quality that your team is producing is the same quality that you would produce yourself? Um, And there's loads of way to get comfort in that, right? First of all, it's to recognize that your team they've been recruited because they're skilled in a particular area,
mm,
right? An area that you're probably not an expert in. You might be, but you're probably not. So they're more than likely going to do it better than you are anyway, right? Because they're they're qualified and experienced in that area. Then you have to accept that they're not going to get everything right, just like you won't get everything right, and you accept mistakes whenever you make them yourself, and you have to accept that the team will make mistakes, and you have to step up when they do. So this is the biggest challenge because if a team make a mistake or something happens in the business, the leader has to stand in front of the team and take whatever the consequences are.
mm,
That's the nature of it, and that can be really hard because if you're not able or willing to do that, then you won't be able to grow your team. So you have to be comfortable with taking the risk. And yes, you put into place anything that you can to mitigate that risk. So as I said, recruiting the right people,
mhm,
recruiting suitably qualified people and experienced people, having the right systems and processes in place. So whatever system is in use in the business to make sure that workflow is managed or deadlines are managed or customers are managed, whatever the situation is, having the right systems there means that you're less relying on the people to make the decisions. The people then are guided by the systems. And that can be really helpful when everything is standardized and everything is process driven. So, say, for example, within this business, Joanne, I think the last time we checked, we had like 168 processes or something like that.
mhm.
So, all of those processes are, documented and mapped, and they allow the team to get comfort in their day to day. And then they allow the management team and so on to get comfort in the team's ability to deliver. Without the right people, without the right systems, it's really hard for a leader to step back and not to be pulled back into the weeds. So, in order to be successful in that area, you have to set your team up for success.
Yeah, that's brilliant. Thank you. Just two more questions that are submitted here, Larissa. So, what are the key signals within or beyond financial health, sorry, our capacity market to watch out for when considering when and how to scale?
Okay, say that again to me, Joanne.
So, what are the key signals within or beyond financial health capacity market to watch out for when considering when and how to scale? So, it might be quite specific, depending on their business. So, maybe that could be one to follow up with after the session, or what do you recommend?
Yeah, we might do. I mean, capacity, financials, and market. Um, the other key considerations, I think the one that springs to mind, and I don't
Mm,
mind following up properly,
mm,
but the one that springs to mind is the external environment.
yeah.
So anything that's happening geopolitically or economically, which we're seeing a lot of at the moment, if there's any concerns that something might happen outside of the business, that's essentially outside of the business's control or the business's immediate market, that might impact that in the future. And that's very much about future thinking and brainstorming. And this is where advisors can really help because you don't want to make a decision that's maybe not necessarily risky, but that could be seen to be risky if the economy was to decline in some way. Um, if you think about hiring people, for example,
Mm,
they're like right now, it's really hard to get, to get good people. Now, it's always hard to get good people, but now it's even more so.
yeah.
So that may impact your decision to scale, or certainly how you might scale in the future.
Yeah, that's great. There's another question in here, but they have sent in an email. But I'm a small audio visual company providing installation services for other companies with a small element of sales to my own clients. I'd like to grow this side of the business. So I suppose that could be quite specific as well. Maybe a consultation, but I know they've already reached out by email, so we could follow that on.
Oh yeah, no, certainly. Look, at absolutely, I'm happy to set up a call with them, with that particular business owner, and give
Mm,
them my thoughts, because growing any specific part of a business will take into account all of the areas that we've discussed already, Joanne. But I
yeah,
mean, every business is different and every individual is different, so there is no one size fits all.
yeah.
So yeah, more than happy to have a chat.
That's great. So that brings us to the end of today's session. So a big thank you, Larissa, for sharing your expert insights, and to all of you for joining us and taking part. We hope you're leaving with some clarity, practical ideas, and a stronger sense of direction for your growth in 2026. As Larissa mentioned, feel free to follow up with any questions, or if you'd like a call, you can email us at hello@kenora.com. Our team at Kenora is always happy to help. We will, as mentioned, this is the first of our five-part series. So our next one is with our head of accountant, Tom Francis, for financial management and how SME owners approach it. So do keep an eye out for that invitation coming soon. And thanks everyone, and have a great day and week. Thank you.
Thank you, Joanne. Thank you, everyone.
Thank
Have a great
you.
day.
Bye bye.